When most people hear the phrase trading bot, they imagine some sci-fi oracle staring into the future predicting prices. Reality check, that's not how any of this works. Inside a core office, nobody is saying, Tesla's up 3% tomorrow, lock it in. The closest thing you hear is, if Tesla breaks this level with volatility, we buy. That's not prediction, that's condition with action. At first, I tried building one trading bot to beat the markets. It did everything. Trend entries, dip buying, breakouts, reversals, and yeah, it worked sometimes. But most of the times, it failed. Honestly, it was a disaster. I would have lost so much money if I actually traded this. So I went back to the charts looking for that lottery ticket. Then I saw something. Some of the market trends were clean, some were choppy, some gapped like absolute demons, and that's when it clicked. The problem wasn't the bot, it was the idea of one bot trading every condition. Instead of building one do everything bot, I started specializing. Each bot would expect a specific environment, and after consulting my basement Einstein, I narrowed it down to two classic styles: momentum bots and reversal bots. Momentum trading buys strength and sells weakness, while reversal trading does the opposite, buying weakness and selling on strength. Be careful with reversal. One mistake and you're catching a falling knife. I'll explain how I handle that later on. I decided to start with momentum. At its core, the bot assumes price strength already exists. I use the 200 SMA to determine whether a stock is strong or weak. If the price of the last three candles is higher than the 200 SMA, the bot buys. Otherwise, it sells. This approach allows the bot to enter a stock that is already moving upwards. As you can see, this resulted in a significantly better performance compared to the bot that I attempted to do everything at once. I have a 31% win rate with a 61 to 1 win-loss ratio on Tesla. The win rate might seem low, and it is, but the high win-loss ratio more than compensates. Momentum strategies often have this characteristic. When they hit big, but most of the time they fizzle out. And honestly, that's fine. Currently, the strategy is up 370K on Tesla and 150K on Meta, shedding a 25K position. Of course, these are well-known names, but honestly, they tend to be more consistent than penny stock. The second trading style we're testing is the reversal bot. You buy when the market dips. But let me be clear, random dip buying is dangerous. You have no idea if or when the bounce is coming. That's how people catch a falling knife and blow their accounts. So before I even consider this strategy, I make sure the stock is already in an uptrend. To quantify that, I use the 200 SMA again. If price is above the 200 SMA, we consider the stock in an uptrend. This filters out macro weak stocks that are more likely to keep bleeding lower. Now for the actual buy condition. RSI must fall below 40, that's our entry, and we sell when RSI recovers above 55. This isn't a strategy style I invented myself, it's derived from a trading stocks reversal strategy. I'll leave a link in the description to that video. Because we're only selling when RSI recovers to 55, our loss technically isn't capped, and I don't feel safe in any trade unless I know the maximum amount I can lose going in. Who's to say the market doesn't drop 20% in a single candle without RSI ever recovering? To fix that, I added a 200 SMA stop loss. If price drops down to the 200 SMA, we exit the trade, no questions asked. That protects us from catastrophic downsides, and honestly, this works pretty well. But it wasn't enough. My win rate dropped hard, so just like I've done last time, I added another SMA condition. Now the price must be above the 90 SMA, so price has to show me even more strength before it's allowed to be a buy. When we run this strategy on the S&P 500, it shows an 83% win rate with a 1-to-1 win-loss ratio. And keep this in mind, these backtested numbers are very different from what we saw with the momentum strategy. Momentum strategies usually win less often, but when they win big. Reversal strategies, on the other hand, tend to have higher win rates, but the upside on each trade is more limited. Neither is better, they're just different tools for different market conditions. Honestly, there are many ways to make money at the markets, not just these two. Another powerful one is arbitrage. That's where you buy an asset cheaper in one place and sell it in another for a higher price. The problem, that game usually requires serious capital. I don't have enough money to buy these super expensive rigs yet, so the market is locked out for me for now. If you want to support the channel and help me get there, I'll leave my Patreon link in the description. Can trading bots actually make money? Yes, I genuinely believe they can. And the biggest advantage of trading bots or algorithms isn't speed or complexity, it's removing emotions. Because emotions are exactly why 90% of retail traders fail. Bots don't panic, bots don't revenge trade, bots just do what needs to be done. Till next time.